Palantir trades at a PE of 1,240 and has real customers and is making real money. Meanwhile, BigBear.ai, it's burning cash, barely profitable, and trading a little bit like a lottery ticket. Yet investors are piling in like it's Palantir 2.0. My name is Rick Orford. I've been trading since 1999. I'm not a financial advisor, which is a good thing because I don't do fluff, right? I break down the numbers so you could actually understand what you may or may not be investing in. And here's what most people are missing. Palantir just posted $214 million in profit and $1 billion in cash flow. BigBear lost $62 million, and that's what analysts are calling an improvement. But here's the twist. Both companies rely on the government, and one bad quarter can crush either of them. So which one is the smarter bet? Palantir and BigBear are both highly regarded AI companies that operate in the same space. Palantir is an AI company that offers big data analytics, helping organizations integrate, analyze, and act on large and complex data sets. The company is well known for being a defense contractor for the US, where military and intelligence agencies use its Gotham platform for counterterrorism, surveillance, and real-time battlefield decision-making. However, its platforms aren't limited to defense, and they're also used in other national and international government agencies, like the Recovery Operations Center, the NHS, the CDC, and the UN's World Food Program. It also has a smaller but growing commercial business through its AIP and Foundry platforms. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Meanwhile, BigBear.ai is an AI and machine learning vendor that offers decision intelligence solutions across global logistics, autonomous systems, and cybersecurity sectors. Most of BigBear's clients are U.S. defense agencies like the DoD, Customs and Border Protection, and the Defense Intelligence Agency. Its platforms like Decision Dominance and Vane are often used in high-stakes operational environments like military logistics, ship tracking, and biometric processing. You can say that there's a crossover between Palantir and BigBear's clients, though BigBear has a smaller client base as of right now. Now, both stocks have experienced rapid growth over the last year. However, the thing that we need to understand is what you're actually paying for, and this is where the rationale of the analysis starts to break down. Right now, Palantir trades at eye-watering multiples. I'm talking about a forward PE of over 400 times and a trailing 12-month ratio of a staggering 1,240 times earnings. And these figures potentially mean that Palantir is priced for perfection by any traditional metric. The average price target for Palantir sits around $107 a share, which potentially means the stock is way ahead of itself at current levels. Personally, I think it's hard to measure high-growth stocks by traditional valuation metrics, but for many investors, well, this is a big deal. BigBear, on the other hand, looks cheap by comparison, but that is probably not the whole story. The company is not yet profitable, so you cannot use a PE ratio, and even on a price-to-sales basis, I don't think it's exactly cheap for a company that's growing just 5%. A little bit more on that later. Its growth is also a little less linear than Palantir's, with BigBear trading over $10 in February of this year. Also, BigBear's rally appears to be a result of Palantir's momentum, as many investors consider BigBear as a bit of a Palantir light. The point is, I think the current valuation is somewhat risky, given that BigBear has yet to establish itself. Now, let's pop the hood and start by the financials. By the way, if you want to follow along, just scan the QR code here to see the actual results. Okay, so Palantir's first quarter figures came in strong, really strong. Revenue hit almost $884 million, which is up around 39% compared to the same quarter last year. Also, Palantir expects its annual revenue to hit as much as $3.9 billion, which is 36% higher year over year. For a company of this size, that's some serious growth. But what's pushing this momentum? Well, both of Palantir's primary segments are exploding. U.S. government business increased 45% year over year, while commercial business increased 71% over the same period. And that's thanks to Palantir's expansion in both markets. BigBear, on the other hand, tells a very different story. Its revenue for the quarter is only $34.8 million and is only 5% higher year over year. Now, before you dismiss it as tiny, it really is compared to Palantir, which is a much bigger company. But BigBear appears to be playing a different game. To be specific, they're building from a much smaller base. Now, some are quick to point out BigBear's backlog for the quarter, increasing 30% to almost $385 million. But there's a catch. These backlogs are just options, meaning customers might buy the services from BigBear, and they don't really have to. It's a potential business, but not a guaranteed move. Now, let's look at how each company makes money because it's important to evaluate these for their future prospects. As for Palantir, the company has what I call the embedded software approach. Once they become part of an organization, be it the CIA, the Army, or any enterprise, their software becomes almost impossible to replace. Particularly, its Foundry business and Gotham platforms create very sticky revenue for the company. Palantir's AIP, or artificial intelligence platform, is changing the way enterprises approach AI integration. Businesses in the States are using AIP to develop their own AI that fits perfectly for their operations, and the adoption has been nothing short of phenomenal, which is the primary revenue driver for Palantir's commercial segment. Meanwhile, BigBear operates fundamentally differently. It's more of a services plus software company, with heavy focus on federal contracts, but without the same platform lock-in effect that Palantir has, at least not yet. I mean, it's a relatively new company, so BigBear still has a lot of areas to explore. Just recently, BigBear has been awarded a contract by the Department of Defense, Chief Digital and Artificial Intelligence Office to advance BigBear's Vane prototype, or its virtual anticipation network. Vane is their product that predicts hostile actions by analyzing open source intelligence, which will be mainly used for national security, but it's still a prototype, but a promising one. By the way, if you found this analysis helpful, feel free to hit the like and subscribe button so that you can get more analysis like this. Going back, I think the most critical difference between these two companies are their bottom lines. As we already know, Palantir has been consistently profitable. Its net income for the first quarter is around $214 million, which is more than double compared to the same period last year. And its annual operating cash flow is over $1 billion, which is wildly impressive for Palantir's business model. BigBear, on the other hand, is burning cash and has been doing so for quite some time. For the first quarter alone, BigBear lost nearly $62 million. And considering its revenue for the quarter, well, that net loss, I think, is pretty high. That said, yes, the net loss for the current quarter is much better than the same period last year. Now, according to management, the losses are primarily driven by costly research and development, which is kind of expected for companies like BigBear, and government funding delays, which created an excess resource capacity. So to me, it looks a little bit like BigBear may have hired a bunch of people for government contracts that haven't yet materialized. And speaking of risks, we can't ignore how dependent both companies are on government contracts. I mean, both of them lean heavily on Uncle Sam, but in different ways. Palantir, for example, has a long-standing relationship with the intelligence community and Department of Defense. The company is not just a vendor anymore, but they're a reliable partner to these government agencies. When the Pentagon talks about AI and data fusion for the military, they're talking most likely about Palantir. But then there's also a risk, right? The Pentagon plans to cut defense spending by 8% each year for the next 5 years. Now, that doesn't necessarily mean that Palantir's revenue is going to suffer, but it's important to know that the government is cutting back on budget for this exact type of product. And when that news was released, it hammered Palantir stock to some degree, although it did immediately recover. But it proves how sensitive that companies like Palantir are to government spending changes. And BigBear, I think they're even more vulnerable. I mean, it's just starting to establish itself as a trusted partner while competing against Palantir and other traditional defense contractors, like, say, Lockheed Martin, who's also developing its own AI capabilities. So I'd say BigBear's customer concentration is the bigger risk here. A few contract losses could seriously hammer their growth trajectory. If BigBear becomes more aggressive at client acquisition, well, that might be an entirely different discussion. So where do these companies go from here? Well, for Palantir, I think the path is pretty clear. They need to keep expanding commercially as they maintain their government contracts. The risk, of course, is that any stumble, like a missed quarter or a lost contract, could trigger some violent repricing. BigBear's path, on the other hand, is a little bit more foggy. Analysts expect revenue momentum in the second quarter of the year, but that's yet to be seen, and the company needs to prove that they can win another major contract to eventually become profitable. Right now, BigBear is mostly promises, but for some investors, it could be the perfect time to start a position. Personally, I think Palantir is the safer bet because I believe in the long-term AI adoption of government and enterprises. Yes, it's expensive, but you're paying for real growth and profits in the future. BigBear, on the other hand, is a speculative move, although it can somehow achieve growth that I like, maybe in the future. As a conservative investor, I lead towards companies that have solid foundations. But hey, markets are what they are. They're unpredictable and technology moves fast. What looks obvious today might seem foolish tomorrow. So that's my take on both companies. But what about you? Are you buying into either of their stories? And why? Share your thoughts in the comments below. And of course, if you found this video helpful, consider giving it a like and subscribe for more. Thank you so much for watching, and I'll see you next time.